the application portal sometime on Friday to get your user ID and password set up, work through any technology issues with that. So that way you're ready to go at noon on Monday when the application portal itself opens up. And I'll whip through the presentation relatively quickly so we can leave time for questions at the end. As we said, you can put questions in the chat, or we will accept verbal applications at the end. Probably the easiest way to do that is use the hand raise icon if that's available, or we'll just have you unmute yourself and Kathleen will shout out to you to ask your question. So let's get started. Kathleen, you can still see my screen okay? So you can see the PowerPoint?
Yes.
Okay.
Yes,
I can tell I don't use Zoom as much as most people, so it gets a little sketchy sometimes. First off, what is the Revitalization Fund? It is part of what was passed with the American Rescue Plan Act, or ARPA, as you'll hear a lot of us call it, on March 11th of this year. And it allocated $28.6 billion to this fund that authorizes the SBA to do this direct funding. We're not calling it a grant program. You'll notice throughout I'll have to catch myself and I'll call it direct funding, just because that the way the legislation was written, it offered us a little more flexibility, and there are some very specific rules around the grant program, which you might have seen some of the stuff that's going on with SVOG that has kind of hamstringed people a little bit with that program. This program was written with a lot more flexibility in it to help the specific businesses that it's intended to help. So we're really excited about the way it's going to work. We're a little sad about the amount of funding because we do expect $28.6 billion to go relatively quickly. So with that being said, we're telling everybody get in queue and fill your application out immediately so we can clearly show what the true need is if and when funding does run out, and go back to Congress and let them know, what we need to continue to meet the needs of the businesses. We will do these direct fundings until appropriations are expended, and funds have to be used for eligible purposes by March 11th of 2023. So there's a really long time period there where people can use these funds. And we'll talk about when, what eligible expenses are and when you could have started accruing those expenses, but you have all the way until March 11th of 2023 to use the money. Restaurant Revitalization Fund is a little bit of a misnomer. It's not just for specific restaurants, and that's one of the reasons we didn't do this as a NAICS code-driven application, because there are specific businesses that we automatically assume were impacted by the inability to have on-site dining take place. It is designed to help businesses that were not permanently closed, and their primary purpose is for the assembly of the public to be served food or drink. So it's restaurants, food stands, food trucks, food carts, caterers, bars, saloons, lounges, and taverns, as well as snack bars like coffee shops or ice cream shops. They are all automatically considered part of the initial eligibility criteria having been checked. Then we look at some of those businesses that do a little bit of a mix, like our tap rooms. You're associated with a brewery if you have a tap room. Well, a brewery may have wholesale accounts as well, but if they have 33% of their gross receipts coming from on-site sales to the public, then they are eligible. Bakeries, same thing. Breweries or microbreweries, tasting rooms, tap rooms, wineries or distilleries, like we have some distilleries in this state who have a large wholesale population, but they also do some on-site sales and on-site tastings. Those might qualify. Inns and hotels who have restaurants that are attached to and or serve food, as long as 33% of their gross receipts are tied back to the consumption of food and beverages, then they're eligible. And licensed facilities or premises of a beverage alcohol producer where the public may taste, sample, or purchase products. It really is any business other than you've got the automatics, the restaurants, food stands, food trucks, and whatnot that are automatically meet this eligibility rule. But then the others, it comes down to gross receipts. So any business whose gross receipts are 33%, or 33% of their gross receipts can be tied back to on-site consumption of food and beverage, could potentially be eligible for this program. The funding amounts are up to $5 million per location. So if you have multiple locations, you could in theory get $5 million per location, but we max each applicant and their affiliated businesses out at $10 million. So we're not going to have an organization that has, 15 locations come in and get 5 million per location and take up that much. It's going to be a maximum of 10 million total per affiliated relationship and 5 million per location. And there is a minimum award is $1,000 that we felt met the de minimis rule based on the legislation, how it was written. Applicants do not need to register in SAM, and we will not require a DUNS and a cage identifier. And for a lot of people, you're saying, who is SAM and what is DUNS and a cage identifier? That's part of the reason we're not requiring this on this go around. So don't even worry about it. You don't have to do it. That was required with SVOG because that was a grant program. This is a direct funding program, so it's not required. So there's one of those flexibilities that was allowed in the legislation. Valid unexpired ITINs are acceptable. Again, you may be saying, what's an ITIN? If you don't know what one is, then you obviously don't have one. They are a tax ID number for people who cannot legally get a social security number in this state, but I mean in this country, but who are here legally. It has to be valid and unexpired. So you have to have filed taxes at some point in the last 3 years, or it will have automatically expired. We can't issue ITINs, those have to go through the IRS. So if that is a situation you're in, you need to work with the IRS to ensure that your ITIN is not expired. As far as ineligible organizations, state or local government-owned businesses are not eligible. Businesses that own more than 20 locations, regardless of whether or not the businesses operate under same or different names or in different industries. So if you own 5 restaurants and 15 dry cleaners and, I don't know, 2 shopping centers, then you're potentially ineligible because you have more than 20 locations. Doesn't matter if they're all restaurants. But if you have 19 restaurants, you're fine. If you have 5 restaurants and 5 dry cleaners, you're fine. It's just no more than 20 locations total. We're trying to make sure that this funding is reaching the smallest businesses. Publicly traded companies are not eligible. Permanently closed businesses are not eligible. Nonprofits are not eligible for this program, where they were eligible for PPP, and for EIDL, they are not eligible for Restaurant Revitalization Fund. And again, you got to hit at least that $1,000 mark to be eligible. Types of organizations, it's pretty much all business types: C Corps, S Corps, partnerships, limited liability companies, sole props, tribal entities, LLCs that are taxed as S Corps or sole props, and independent contractors are all eligible. If you're a B Corp, you're going to go into the application portal as however you file taxes. So B Corps would file as either a C Corp or an S Corp. So you'll use that when you do the application. Franchises, when I talk about publicly traded companies, the franchisor is not eligible. Domino's itself, the big business, is not eligible, but Domino's stores may be eligible. So they have to be on our franchise directory. The franchise directory link is built right into the application, but you can always jump out on SBA.gov or just Google SBA franchise directory and check to see that your franchise, if you operate under a franchise agreement, is on the directory. Many franchises were added during the PPP program, so you'll want to take a look at that. And if a brand is not on the franchise directory, the franchisor has to request access to the franchise directory or request to be added, and that will have to go through a review in our legal department, and they would send their request to franchise@sba.gov, and they're going to have to submit all of the documentations. They might have a franchisee sign. So that is a time-consuming process. So hopefully if you're a franchise, you're already on the directory. But if not, get with your franchisor and ask to be added. Bankruptcy eligibility was clarified a bit. There was some confusion, or actually not confusion. You weren't eligible if you were involved in a bankruptcy with the PPP program. But with this program, if you are already or operating under an approved reorg plan under a Chapter 11, 12, or 13 bankruptcy, and you meet all the other program requirements, you are eligible for restaurant revitalization. If the business is permanently closed, if they filed a Chapter 7 liquidation bankruptcy, or if you filed a 7, 11, 12, or 13 bankruptcy, but you don't have that approved plan of reorganization yet, I'm afraid you're not eligible. Because this is a funding source, you have to, that could, if potentially, if it's not used for eligible purposes, have to be paid back. You have to be under that plan for reorganization already. And if the business has permanently closed their doors, they're not eligible. But if you're temporarily closed, or if you're a seasonal business, so you're not open right now, but you'll be opening in May, if you're on a spring break, I had a business advisor say that to me the other day. This business happens to be on a spring break, but they plan to open this summer. That's fine. You're eligible. You were in operation before you plan to reopen. It's just if you've permanently closed, you're not eligible. The only program, SBA program, that really kind of interacts with the Restaurant Revitalization Fund is the PPP program, the Paycheck Protection Program. Whether you got the loan in 2020 or you got a first draw in 2021 or a second draw in 2021, that loan amount, that PPP loan amount, is going to be deducted from your Restaurant Revitalization Fund calculation. So it's very important that you enter your application for your RRF into the portal in the same way that you applied for and got your PPP loan, because those are going to be linked in the system. So you want to make sure you apply using the same EIN, I-10, or SSN, whatever TIN you use to apply for your PPP. You want to use that to apply for your Restaurant Revitalization Fund direct funding. Just make sure everything is the same. And if you have a problem with how your PPP is set up, talk to your lender. Your lender is the one who can work with getting things corrected in that system if they need to. If you have a PPP application in process, if it's not funded before you apply for your Restaurant Revitalization Fund, you've got to have it withdrawn. You have to have already had that PPP loan funded prior to applying for this loan. And you cannot apply for a PPP loan after you've applied for a Restaurant Revitalization Fund. Your PPP fund has to be, PPP loan has to be fully funded prior to getting, or fully approved in our system prior to getting the RRF. And you can't have an application pending or have received a shuttered venue operators grant. So just keep that in mind. If you're one of those organizations just trying to figure out which program is the better avenue to go in, you're going to have to pick a lane. If you have an SVOG, pull it. If you're going to go RRF, if you want to go SVOG, don't plan on applying for the Restaurant Revitalization Fund. You do have to do the standard certification that, current economic situation, uncertainty makes a funding request necessary. So that's what we call our credit outsource statement. And that's built into the application. It's just going to be a checkbox. Just remember that anytime you're certifying anything on an application with the federal government, be it a PPP loan, 7A loan, 504 loan, or Restaurant Revitalization Fund, those certifications matter. Read them. Make sure you can honestly attest to them and then sign them. Don't just blindly initial stuff, because those certifications are there to walk you through eligibility, and lying on those certifications opens you up to fraud charges. So, not to threaten anybody, but just keep that in mind. It's important. We're protecting the taxpayer dollar here. As far as eligible use of funds for this program, much broader eligible use of funds than there were for the PPP program. These eligible use of proceeds are much more like what the economic injury disaster loan will allow you to use. You can use it for pretty much regular business expenses, so payroll, utilities, maintenance expenses. Your POS system breaks and you have to get a new one. You can use it for that. Business supplies, including PPE and cleaning products. Raw materials, so food and beverage expenses, you can use it for that. Covered supplier expenses, and regular operating expenses like your insurance payment, your marketing fees, licenses, legal, any point of sale expenses or fees, all of that. It cannot be used for construction though. So I've been asked a couple of times, could I use it to put in a takeout window? You cannot. That would be construction. What you can use it for is to construct outdoor seating and to set up your outdoor seating area. So it looks like this summer, again, a lot of businesses or a lot of restaurants or eating places are going to put, I can't even remember the cute little name we have for them, but seating out in parking spaces. So you might have to put up Jersey barriers, and maybe you want to put some planters out there to pretty it up. Or one of the coffee shops I go to has these wooden things over the Jersey barriers, so it's not quite so blatantly just a hunk of concrete there. That cost is eligible. Cost of the table is eligible. You're putting up like a little pergola thing over the seating area or an awning. That's an eligible expense. So outdoor seating space, eligible. Regular construction, building an additional room for more seating inside, not eligible. And you can also use this fund to pay business debt. Remember, on PPP, you could only pay interest on your mortgages. you can make regular principal and interest payments using these funds. One thing we do like to say is you can't prepay. So you can pay anything that was accrued during the eligible period, and then anything you accrue, during the covered period, and anything accrues going forward, but you can't prepay to pay down something. You can't refinance debt. You can't pay off a loan, except credit cards and lines of credit. Both of those are short-term debt that we would expect, if you were able to use them, appropriately, the way ideally you would use them as a business owner. You might charge something, pay it off in full. So you'd normally pay your credit card off in full, you'd pay your line of credit off in full. You can pay those off in full using Restaurant Revitalization Fund loans. And again, mortgage payments, principal and interest, equipment, principal and interest is eligible use of proceeds of these funds. You can use the funds anytime for bills that were incurred from February 15th of 2020 through March 11th of 2023. So you can go back in time to February 15th of 2020, and any bills you have outstanding, say your landlord put you on deferral for your rent. They want to get their rent payments eventually, but they knew you couldn't make them. They didn't evict you. Whatever you owe them from February 15th that you incurred from February 15th of 2020 ongoing, you could pay. Other bills that you incurred, say you used your line of credit to get back starting in February February 15th of 2020, you can pay that off in full. So that's an option, and it's a really long covered period, so that's helpful. If a business does close during the covered period permanently, not again seasonal businesses or businesses that take those breaks, but if you permanently close, your covered period ends on the date that you close. And if you have funds remaining at that point, you need to return those funds to the federal government. So just keep that in mind. But otherwise, all the way through March 11th of 2023 to use the funds. As far as an assessment or what kind of tracking we're going to do, there was a question out there about, well, how will these loan funds be dispersed? We're going to disperse the funds once you go through the application process and everything's been fully vetted and approved. We'll disperse the funds into the account you've provided us with. Then you're going to just keep track of what you're using the money for. And once all the funds have been exhausted, you're going to have to give us a detailed expenditure report and one of those certifications that I talk about that just says, I promise I use this money for eligible use of proceeds and everything I'm providing you is true and accurate. So you're going to provide that at the end of the period, end of your covered period. If your covered period crosses years, you're going to have to do that once a year, or you're going to do it through the end of the covered period, which is 2023, March 11th of 2023. And we'll be providing additional guidance as far as what happens, as far as how you're going to do that reporting exactly. What happens if your funds, how do you repay funds if you're found to have used the funds for ineligible purposes, and that sort of thing, but we don't have that guidance yet. How is a loan calculated is actually relatively straightforward. That's one of the nice things about this program. If you were in business for all of 2019, you're going to take your 2019 tax return figures, your gross receipts from 2019 tax returns, and you're going to subtract that from subtract 2020 gross receipts, get the difference. If 2020 was lower, that amount minus your PPP loan is what you're going to get for funding. So this program is really to have the government grant funding or the revitalization funding bring you back up to what you were in 2019 based on 2020 gross receipts. Super straightforward if you had a full year in 2019. If you did not have a full year in 2019, say you opened in June, you're going to take the months you were open, divide by that number of months, and multiply by 12. So you're going to annualize that figure to get a full year 2019, and then you're going to subtract 2020, subtract your PPP loan amount, boom, that's your funding amount. You can, if you were not open for the full year in 2019, use either calculation 2 or calculation 3. This annualization is calculation 2. Calculation 3 takes a look at expenses as well as gross receipts. So that process, if you're using calculation 3, will take a little bit longer. So just keep that in mind. we have to validate the expense reports at that point. So that's why it takes longer. For calculation 3, it's for applicants that began operation on or between January 1st of 2020 and March 10th of 2021. So if you haven't opened, but you've incurred expenses as of March 11th of 2021, you are potentially eligible. So this is a dramatic shift from how the other programs have operated. This is going to help out some of those newer businesses and startups. And what they're going to do is they're going to take the total amount of eligible expenses between February 15th of 2020 and March 11th of 2021, minus their 2020 and 2021 gross receipts for the same time period, and minus any PPP loan amount. And that's going to be their funding amount. So again, this one's going to take a little bit longer because you're going to be submitting expense information. You're not going to have tax returns that we're going to be able to validate. So we'll have to do a little more external validation or third-party validation there. If you were only open for part of 2019 and you feel like you could get higher funding using this methodology, you can use it, but again, it's going to delay the funding because we are going to have to manually review the application. So just keep that in mind. And again, the application is going to walk you through all this stuff. So don't feel like you got to be all over it right now. As far as what you can exclude from 2020 gross receipts, you don't include your PPP loan because we're going to catch that on the back end. So not your first draw, not your second draw, not your 2020, not your 2021. PPP does not get included in gross receipts. You also don't have to include any 1112 payments you might have received from the SBA. And 1112 payments are those payments that we made for small businesses on their 7A, their 504, or their microloan. You don't have to include your economic injury disaster loan, your EIDL advance, your targeted EIDL advance, or any other grant funds you received via the CARES Act. So the state and local business grants that might have been funded by CARES Act money, you don't have to include those. If you received any other state or local grant, I know like some chambers had some grant money, some towns had some grant money, those don't have to be included. So don't include that in your gross receipts. And you don't have to include any Randolph-Shepard Act financial relief and restoration payments appropriation. So it's gross receipts from business activities are pretty much what's going to get included. You're going to apply through our platform at restaurants.sba.gov, or you may be able to apply directly through your point of sale vendor. So like Square, Toast, I think it's Aloha, and NCR have all partnered with us. Some of them have partnered, so they'll actually take the application through the point of sale system. So that's super handy. You're not even going to have to log into restaurants.sba.gov. You're going to just go in through your point of sale vendor and do it that way. Then there are some other vendors who have agreed to supply us with the financials in a format that we know will meet our needs. And if they're coming from that point of sale system, we're not going to have to take too close a look at them. We're going to know that they're already approved and verified by a third party that we have an agreement with. You also are going to be able to apply by phone. What I will tell you about the telephone application system is it's going to take longer. This is a competitive grant program. There's limited funding. You want your application as high up in the queue as you can get it. So if you can avoid a phone application, avoid a phone application. Because what happens is you do your application by phone, they then have to mail you the documents to sign all your certifications and work with you on uploading documents or work with you on mailing back the financials. It's just going to be a much longer process. So if you are like a lot of us and don't have the best internet connection at home, but can drive someplace and get a better internet connection, do that. Get online and do it, or do it through your point of sale vendor. Point of sale vendor, if your point of sale vendor is doing this directly, super straightforward, very slick process. You're going to want to jump in with that because they're going to do an API automatic upload to our system, save you a lot of time. As far as documents that you'll need to apply, there is a sample application out on our website. It is going to come down at some point and we're going to upload actual screenshots from the system. But for now, there's an application out online that you can see what the system's going to ask you for. But the system's is going to build the SBA Form 3172 for you if you apply online, or your point of sale vendor will do that. That's going to be completed, signed, initialed, the works to validate it. And then you're also going to do your IRS Form 4506T. If you're not familiar with that form, it's a form that allows us to reach out to the IRS and get tax transcripts. 2019 taxes are required. filed 2019 taxes. So hopefully you've all got those filed. We have an MOU in place, or a memorandum of understanding in place with the IRS, where they've told us we'll get you tax transcripts within 5 days of you asking for them. So you're going to online complete your 4506T and sign that. All digital, no back and forth like you might have gone through with the IDL program. So much more smooth there, we hope. And then you're going to offer some gross receipt documentation. Maybe it's 2020 business tax returns. It's definitely 2019 business tax returns. IRS form 1040, 1120, 1120S, might be a Schedule F, might be a K1, any of those. You might supply bank statements. You may supply externally and internally prepared financial statements, like your profit and loss or income statements, or those point of sale reports. And even if your point of sale vendor is not one that we have an agreement with, you can still give us reports out of your point of sale system for your income. So just keep that in mind. They may be able to generate that for you. If you're using calculations 1 or 2, that one where you're using 2019 tax returns and 2020, either filed tax returns you plan to file, or your point of sale gross receipts information, you're going to give us your 3172. Again, that's generated by the system. 4506T, generated by the system. 3 months of bank statements for the bank account you're going to want us to deposit money to. If you've changed bank accounts, plan on showing that continuation, prior bank account and your new bank account. And 2020 gross receipts. You got to give us at least one of these things. Ideally, federal tax returns filed, your 2020 filed returns. If you have not filed your tax returns for 2020, you're going to want to try and get that done, or get them prepared to file, and your point of sale report. So haven't filed my 2020s, but I've got a point of sale system that can kick out my gross receipts for 2020. ACEs will take that. What we will also accept, but it may delay the process, is externally or internally prepared financial statements, like your income statement or your profit and loss statements. Those need to be signed, dated, and certified. And when we say certified, you're going to write on there, something along the lines of, sign it, date it, these are valid and true, and will match up with what I'm going to file on my taxes. So there'll be some guidance in the application system for that. If you're doing calculation 3, and this is the calculation method for those new businesses that were not in business at all in 2019, or the newer ones in 2019 who want to use this method, this is the one that's going to take a little bit longer. So just keep that in mind. You're going to do application form 3172. Again, most of us are going to do that online, or you're going to do it through your POS. You're going to do the 4506T, again, online. You're going to give 3 months of your bank statements, including supporting account linkage validation. So we're going to have to be able to link to that account and prove that it's a valid bank account. You're going to give 2020 and 2021 gross receipts for at least one for each year. And again, that's 2020 tax returns, or that have been filed or prepared for filing, 2020 point of sale reports, or 2021 point of sale reports. As far as expense documentation, what we would prefer is your internal documentation with a CPA comfort letter, if you have a CPA. And what a comfort letter is it's just a letter from a third party that says, a CPA, that says, these are not reviewed or audited statements, but we attest to we've validated them and feel they are accurate and true. It's just a third party validation for us. So that's ideal for us. Or you're going to give us your expenses related to any of the following categories, like your payroll, your 941s, your outdoor seating invoices and payments made, where you were setting up your outdoor seating space, and any loan statements associated with business debt that meets those eligible expenses. That list that we talked about before, you're just going to show proof of those expenses. And again, these things that you could use may take longer, externally or internally prepared profit and loss statements, signed, dated, and certified, but no comfort letter attached. And also you're going to give us those payroll documents, outdoor seating expenses, and other business debt expense calculations or evidence. So just keep in mind, if you can give us something that's already been validated by a third party, or if you can use calculation method 1 or 2, it's going to go more quickly for you. So if you are not one of those true restaurants, you're not a restaurant, a food truck, food cart, a lounge, or a coffee shop or ice cream shop, but you're a brew pub or a tasting room or an inn, there are some other documents that you're going to have to supply to prove that 33% of gross receipts. So for anyone who files a tax and trade bureau form, you may be able to use that, or you may have some state or local forms that identify the breakout of where your source of revenue is coming from. Or you'll have internally created reports that you may use, like your inventory management, your sales reports, your accounting software, anything that shows the avenue of that income. And for businesses that were opened in 2020, your original business model, that business plan that we always love to talk about, should show that you planned for at least 33% of gross receipts to have come from on-site sales to the public. So you're going to have to give us that business plan reflecting that. If you're an inn, you are going to have to show that on-site sale of food and beverage to the public consisted of always 33% of gross receipts for 2019. Again, going back to 2019 tax or gross receipt figures. For businesses that opened in 2020, you're going to, again, have to show that business model planning and that 33% of gross receipts were planned to come from on-site sale of food and beverage. There is a call center set up for this. We've actually staffed it with way more people than we have in the district office to answer questions, and they speak more than just English. There are at least 10 languages spoken in the call center, so if English is not your first language, they may have somebody on site who can help you out, and they have access to another 30 languages for translation. So if English is not your first language, they can still help you out. And if English is your first language, you're all set there. You can call that call center line for any questions. You can also contact our office and ask us questions at the Maine District Office. Our phone number is 207-622-8551, or you can email us at Maine, like the state, MAINE_DO@SBA.gov. We'll answer any questions we can, but the call center is there. Right now, they're open Monday through Friday, 8 a.m. to 8 p.m. to answer questions Eastern Daylight Time. Best practices for getting your application approved quickly through this process is complete documentation up front. If the system asks for it, provide it if you can. If the application is incomplete, it's going to get bounced from the system and won't be able to fully process. You'll get bounced back in queue. If we have to restart the application process again, that's just going to delay you. Use your resources. If you have a CPA, use them. If you have a point of sale system and they're partnering with us, definitely use them. If your point of sale system doesn't happen to be partnering with us yet, we are reaching out to all the traditional point of sale systems, trying to get them to partner with the agency. Still, use them if they offer you reporting through that system. If you submit your application, you go, as you see it go, like so many of my emails that I hit send and then I see the typo as it goes off into the interworld. If you see a mistake or recognize there's a mistake, give the call center a call. They can probably make a correction on your application before it gets picked up in the queue. So try to correct it up front. Don't wait for someone to call you. And if you are still planning to apply for a PPP loan or have that PPP loan in process, talk to your lender to make sure it's going to be done before Monday, like approved before Monday, so that does not interfere with your application. Pilot period is going on right now. We actually opened it up last weekend. We've started taking applications from a select group. We are not funding those applications yet, but what this was reaching out. The agency reached out to some individuals who had PPP loans who met the priority period eligibility, and we're asking them to break the system. Go in there and treat the system like you would treat it, because if you have programmers test the system, if they design the system, they designed it the way their brains work. So they don't necessarily break it. So we had to have people from the real world test it for us. So that's going on right now. It's been very successful so far. We're seeing applications take 20 to 25 minutes. The system's set up so we can see any place that causes people to kind of pause or takes them longer to process, so we can see where we need to offer maybe a little more clarification. So far so good with that. Then there's a priority period, and that is day 1 to 21. So starting day 1 on Monday for 21 days, we are going to accept applications from everybody. And I'm going to say this again, we're accepting applications from everybody starting on Monday at noon, but only applications from small businesses owned by women, veterans, and socially and economically disadvantaged applicants will be funded during that period. So the people that are in the pilot program are going through the process and they qualify for it based on those eligibility requirements. So hopefully they'll get approved and be funded once we open up for funding. And then we're going to also fund through the next 21 days other people that meet those specific requirements. But you want your application in queue straight away, because on day 22, we're going to start up with all those other eligible applications and process and fund them until funds are exhausted. Now, limited sources of funds, limited amount of money out there. So we do expect the money to run out. Do I think it's going to run out during the priority period? I don't know. I haven't seen any modeling on that or heard it. Nobody's answered that question when I've asked it, we'll say. But if it does, we're definitely probably going to go back to Congress and say, hey, look at all these applications for businesses in need in our queue. This is what we need for funding, and see what we can get. So, the intent is to go back and continue to get funding as long as there are eligible businesses that need this money. As far as priority group qualification, it's a small business concern that has 51% owned and managed through the day-to-day operations by one or more of the following people: women, veterans, or socially and economically disadvantaged individuals. And we'll talk about what that means in a bit. But applicants self-certify to this, but just keep in mind that any direct funding program, any grant program, we've seen it with the PPP program, any information about this program once you're approved is going to be FOIAble and will be open to the public. So if you self-certify to one of these groups and you don't qualify, even, we'll be asking probably for evidence at the end, but it will open you up to criticism, or people in your community may see that and recognize that, and there is reputational risk associated with that. So don't try and game the system and say that you are women run when your mom gave you some money to start the business, but she's never even set foot in it and doesn't have anything to do with day-to-day operations. It has to be somebody who is 51% owner and is involved in the day-to-day operations. If you have multiple owners that meet or like say 20% women own, one owner that's 20% who's a woman involved in day-to-day, and two that are veterans, 20% each. There's 60%, all meet the requirement, boom, you qualify for the priority period. As far as socially disadvantaged individuals, those are individuals who are subjected to racial or ethnic prejudice or cultural bias because of their identity as a member of a group without regard to their individual qualities. So individuals who are Black Americans, Hispanic Americans, Native Americans, including Alaska Natives and Native Hawaiians, Asian Pacific Americans, and subcontinent Asian Americans all meet that socially disadvantaged individuals checkbox. And then also economically disadvantaged individuals are those socially disadvantaged individuals whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities as compared to others in the small business area who are not socially disadvantaged. That's a mouthful. So I will tell you, in the program guide, there's more information about this, and there's a link to the CFR that talks a little bit about how to determine or how to prove that you're economically disadvantaged, and gives you some ideas around that. So take advantage of those resources that are available out on our website. If you try and reorganize your entity to meet one of these qualifying priority groups, we're going to catch you, we're not going to like it, and we're going to boot you out of the system. You will automatically be disqualified from an award. So again, don't game the system. This is based on how you operated in 2019 and 2020. It's not based on going forward, and just don't game the system. We don't like that. There are some funding set-asides. Funding set-asides are separate from priority groups. Priority groups are one thing, and then we have these funding set-asides of $5 billion set aside for applicants with 2019 gross receipts of not more than $500,000, or an additional $4 billion set aside for those people that are 500,001 to 1.5 million 2019 gross receipts, and then 500 million set aside for the really small businesses with gross receipts of $50,000 or less. The administrator may look at how these funding programs are working out, and reallocate them at any time, but those are out there. And then if you have any questions or to keep track of things, definitely sign up for our newsletter. You can go to sba.gov/updates or sba.gov/me and click get email updates. We are sending out press releases. We're sending out e-newsletters about this. That National sent out some information about this program and some other webinars that are coming up. So definitely sign up for that. You can unsubscribe at any time if we get spammy, but we try not to be, and we try to send important information. Also, as archaic as it may sound to some people, because Twitter seems so old school, we are on Twitter at sba.gov for national Twitter, at SBA_Maine for the Maine district office. And again, our email address, maine_do@sba.gov. Phone number 622-8551. And you can actually just go to sba.gov, and we've got a bunch of hot buttons on the front page that will get you to all of these COVID relief programs. I will say, I enjoy doing these sessions and I love answering your questions, but I am begging you, email maine_do@sba.gov if you have a question. I am trying to keep up with all the lenders, all of our resource partners, all of the congressionals, and a bunch of other people, so I may not get to as quickly, whereas one of our other teammates may be able to get to your question at maine_do@sba.gov. And if they can't answer the question, they're going to elevate it to me, and I'll make sure that you get an answer. So that takes us through the end, and I'm going to turn it back to Kathleen, and we can answer some questions.
Thank you, Diane.
Kathleen, can I jump in just for a real quick second?
Yeah.
You're going to find it in the Q&A anyway, but there's a lot of people, and I spoke with you on this, Diane, a lot of people on this call that include breakfast in their room rate, and they're wondering if they, you and I had that back and forth about how it potentially could be, but you weren't able to verify that. So I don't know if you have any more information on that. And just very quickly, did I hear you say that you don't need to include PPP, that's not a disqualifying element, that you don't need to include that? Or is that it's not included in the gross receipts, but is it reported somewhere else or no?
It's not included in the gross receipts because we're going to subtract it on the back end. Your gross receipts numbers subtracted from each other give you your eligible funding amount, and then we're going to pull PPP out of that. So we don't want to double count it.
As so far PPP as for both years. So 20,
yes, all PPP loans.
Thank you very much.
Yeah. So as far as ins that include food services in their room rate, it's going to be food that is available to the general public. So it's going to be 33% of your gross receipts are restaurant revenues for restaurant. So if you serve breakfast and you also are open to the general public, and you can carve that out and show gross receipts came from this much for food, you'll be able to do it. But you're going to have to give some sort of documentation to show that 33% of gross receipts came from food sales for consumption on site in 2019.
Yeah, so many people actually allocate the food aspect of that. Other people don't. So you would at least have to be able to show a revenue stream through an allocation, not just expenses like I spent, $800 on eggs or something like that, correct?
Right. And if they're going to go that expense route, they have to be one of those people that qualifies for calculation 3. So opened in 2020 or open partial year in 2019, and can go that route. But that's going to take a lot longer because somebody's going to have to go in and manually validate that information. Yeah.
Okay, great. So that answers the first 2 questions. Susan has a question here about multiple types of activity under one corporate name. Can you see that, Diane, or do you want me to read that?
Yeah, can you I think I see it. If we have multiple types of activity under one corporate EIN, but in one building, can the breakout just the restaurant money in order to apply? Okay, so say you have a hotel and you have a restaurant and a hotel, and it all files under one EIN. That EIN's gross receipts are what you're using to get to that 33% number. If you have a hotel with a restaurant in it and the restaurant has a separate EIN, the restaurant is standalone. It comes back to that EIN number. So if you have multiple income streams under a single EIN, then you got to go to that 33% number if you're not classified as a restaurant, pub, food cart and all those other things that we listed that don't have to hit that 33% number.
I am, hi, thank you very much. I am classified as a restaurant, but I have a lobster pound running under the same EIN and the same trade name as the restaurant. So I'm trying to figure out, should I just be taking the receipts from the restaurant, even though it's all classified as a restaurant, but clearly a lot of the activity is buying and selling wholesale lobsters, which go into the restaurant, but also go other places. So that's why I'm confused about what to do exactly and how I can prove it. I have a POS system for my restaurant, so that works, but it's all one big EIN, so my tax return wouldn't match the restaurant receipts. You know what I'm saying?
So hopefully your POS system is one that we've partnered with, because that will make that much easier to show.
So it's not.
Yeah. I don't want to work with me here, Susan.
I know.
So I feel like your NAICS code is a restaurant NAICS code, even though you have a lobster pound associated with it.
Yep, it is.
That's a really good question. Let me see if I can do a little research on that and get back to you. I assume I can get back to you through Kathleen. You have Susan's contact information, or I'll get back to Kathleen and she can share the answer with the group.
Okay.
But I'll see if I'll research that a little bit. On our website, just to I'm going to push the website a little bit because there's so much information out there. There's a knowledge center that is similar to an FAQ. It's got some frequently asked questions, but it's also got some commentary out there about situations like this. So I'll dig into that a little bit there and see.
Okay, my follow-up was, I thought that I saw on one of your slides that food had to be consumed on site. So the restaurant food that I have for takeout is not included in that, or is included in that?
I haven't seen that. If you're open for full year 2019 and you are a restaurant, I haven't seen that be subtracted, because it's going to get subtracted on the takeout side in 2020 if you were still open for takeout. It's really looking at how did the restaurant operate in 2019 and what did you lose in 2020 because the on-site food was not available.
Okay, I see. All right, thank you.
Yeah.
Thank you. Scott McIntyre has a question. He's considering relocating his business to a smaller facility in a neighboring town. Are relocation costs in 2021 an acceptable use of funds?
No. Nope. It's the operating cost. It's your regular operating cost for having the restaurant open and operating. So as far as I understand, relocation costs would not be an eligible use of funds. Once you're there, the rent paid or the mortgage interest payment, mortgage principal and interest payments would be eligible, but not the actual cost to relo.
Okay. And then he says, what happens if in 2022 the business closes permanently?
So at 2022, at that date that you close, the covered period comes to an end. Any funds not used for eligible purposes at that time will have to be returned to the federal government. And you'll just have to go through the closeout process of supplying the documentation relative to your eligible use of proceeds and all of the paperwork that's associated with kind of closing that direct funding option out.
Thank you.
Yeah.
And finally, we're going to share the presentation with everyone. So that'll be really helpful. We'll share the recording. I think that's it for questions. Thank you, Diane. So thorough and helpful.
My pleasure. I will just put another plug out there for the website. Jump out on the website. Make sure you get on there Friday or over the weekend to get your user ID and password set up so you're ready to go on Monday. If your point of sale system is working with us, and as we add them, we're putting them out in that knowledge base, I'm trying to remember, I think we call it knowledge base center on the website. We'll add to that list. So take advantage of that for sure. And we have some other webinars coming up. There are some national webinars this week. There's a demo of the system itself, I think, taking place today at 1 and again at 2:30, and it will be recorded and placed out on the website so you can get a preview of what the system will look like on the website once that recording is available. And we have some multilingual events coming up. We've got a Spanish webinar today actually that may have been going on while we were doing this one, but we have another webinar on May 7th that we're partnering with the Portland Office of Economic Opportunity, and that one will be offered in English, Vietnamese, Spanish, French, and Somali. So if that would benefit anyone, definitely make sure that either you register for it, or if you know anybody else who would be benefit from that, please share that information with them. And thank you so much to Kathleen and to Greg for hosting this with Hospitality Maine. I really appreciate your partnership through all of this that we've gone through over the last year.
Do you have time for one more question?
Sure.
Just quickly, my accountant hasn't finished filing my taxes yet, and I'm not sure whether he will be by Monday. Would state sales tax reports from how you file that online assembled, would that be a suitable substitute for gross receipts for 2020?
That would be one of the things you could use, but what type of business are you?
I'm a pub.
Okay, so you're an actual restaurant or pub.
Yeah.
So yeah, you'll use, hopefully your point of sale system will give you a breakout of
I have an old school one that isn't online. It's just, I don't know, it's a cheap one.
So
regretting it now.
There's lots of things people are re-looking at how they're set up. So let me go back to that calculation too. Gross receipts for 2020. We're going to want a federal tax returns ideally, or point of sale receipt, a point of sale report, or externally or internally prepared financial statements, such as your income statements or profit and loss. So you're going to give the numbers pretty much that you gave to your tax preparer, and maybe your tax preparer would be in a position where if they haven't got your taxes ready, they could give you an income statement or a profit and loss statement and offer that comfort letter too.
Okay.
To submit along with it. But yeah, I think submitting your sales tax information is another great supporting document there.
Okay, thank you.
Sure.
Good job.
My pleasure.
Can you take one more question, Diane?
Yeah, sure.
Jessica Nichols looks like she has her hand up.
I do. Thank you so much. I'm sorry to keep you so late, but I have just a couple of quick ones. One is when we do the application process, are the funds immediately awarded, or like what's the processing time that goes on with SBA? Like how will we know if are there going to be sufficient enough funds to cover what we're requesting?
So what will happen is you'll put your online application in, and you'll be set up in this portal that will communicate with you through the portal. We'll send you messages through the portal and that sort of thing. And it will go through, hopefully, the way the system's set up is the vast majority of the review will be done electronically. We've got quite a bit of artificial intelligence and some other systems out there that will review the application, do the math, depending on what source you used for your gross receipts and your gross receipts for 2019 and 2020, whether or not we have to do any external validation. That will hopefully, from the vast majority of these, like our goal is at least 80% of these will go through the automated process, and a human being won't even really have to look at them. The IRS has agreed to give us a 5-day turn time on tax transcripts, which anyone who's ever been involved in that process knows quite often it takes a lot longer. So we are going to have to validate your 2019 tax returns. So if you haven't heard anything in 3 or 4 days, don't panic. We're expecting it to take probably at least 5 days for the IRS to get those transcripts back to us. And then you'll be able to see in the portal that you've been approved or not, and you'll have already given us your banking information for us to deposit the funds to you.
Okay, and then I did read somewhere on the website too that it said that post office boxes were not acceptable. And living in rural Maine, both at my house and at my restaurant, we do not get mail delivered to either spot. So I only have a post office box. Should I just use like the physical address at the restaurant? I just don't know how that pans
I
out.
think you're going to have to use your physical address. The only time we'd be mailing something to you, and I'm hoping, and I haven't seen how it's set up in the system yet. I'm not going to actually have access to the system. We won't be handling most of this here. I'm hoping, at least in our other loan system, it has a spot for physical address and mailing address.
Okay.
I'm hoping that that's in there, but if it isn't, put a physical address in there. And we're using it to validate, for fraud protection, to make sure that it's not fake PO boxes that people have set up.
Okay, Perfect. Thank you so much, everyone. I really appreciate everyone's work for this lovely year we've experienced together.
It's definitely been challenging for everybody, I think, but thank God in Maine, at least everybody kind of, when everything hit the fan and we said we got to do these programs, everybody just jumped in the boat and started rolling.
Thank you for your time, Diane, and your expertise. And thank you everyone for joining. We'll be sharing the recording as soon as it's available.
Thank you guys for all your help, and good luck to everybody with the process. Definitely get out on that website and take a look at it now.